constantly get asked this question: how can we earn a monthly income using SWP? What is SWP? Which are the best mutual funds for doing an SWP? To research this video, I read a lot of articles on the internet and watched many videos. But unfortunately, I did not find the correct answer anywhere. Everyone has complicated SWP so much that it feels like rocket science. I promise, through this video, I will explain SWP in the simplest possible manner. And yes, at the end, I will also tell you which are the best mutual funds for doing SWP. So let's first understand SWP itself. The magical piggy bank concept. Imagine you have a piggy bank where whenever you put money in, the piggy bank increases that money a little bit. So if you put rupees 1000 into the piggy bank, the moment it goes in it becomes rupees 1100. The piggy bank added rupees 100 on its own. So in a sense, this is a magical piggy bank. Now let's assume you have been putting money into this magical piggy bank for the last 10 years. Sometimes rupees 1000, sometimes 2000, sometimes rupees 5000. In 10 years, you have deposited rupees 1 lakh into that piggy bank. And because this piggy bank is magical, that rupees 1 lakh has grown to rupees 1.5 lakh inside the piggy bank. Meaning the piggy bank added rupees 50,000 with its magic. Now you tell the piggy bank, buddy, I don't want to spend this entire rupees 1.5 lakh at once. Instead, just give me rupees 1000 out of this every month. The piggy bank tells you, I will give you rupees 1000 every month for the next 15 years, and even after 10 years, I will increase your remaining rupees 1.5 lakh to rupees 3 lakh. Don't look at the amounts right now. Don't think about inflation for a second. Just understand the concept behind it. You put some money into a magical piggy bank for 10 years. Then after 10 years, you started withdrawing money from the piggy bank every month. You withdrew a fixed amount every month for the next 15 years. But despite that, your initial amount, rupees 1.5 lakh in our case, instead of finishing, actually increased. This is Systematic Withdrawal Plan SWP. Now, how to plan this? How much amount should you invest? How much can you withdraw? And after how many years? We will discuss all of that. Let's look at a real life example to give you more context on how SWP works. This is a real example of a balanced advantage fund. I have removed the name of the fund to avoid any confusion. You just focus on the numbers. The investment value in the last column is the amount that had accumulated in our piggy bank after 10 years. In this case, this amount is rupees 50 lakh. The total amount is rupees 50 lakh and the total units are 50,000. Just like a listed company has shares, mutual funds have units, and similar to a share price, we have the NAV. So in this case, there are 50,000 units. The price of each unit is rupees 100, meaning the NAV is 100. And total investment value is total number of units multiplied by price of one unit, NAV. 50,000 multiplied by 100 equals 50 lakh rupees. Okay, is that clear? Now you started withdrawing rupees 30,000 every month from this, and simultaneously this fund will also give some returns every month. Here we have shown the actual market returns of this fund. When you withdrew rupees 30,000 in the first month, the NAV increased from 100 to 102. This means the fund grew by 2% that month. So according to this, you will have to withdraw approx 294 units. 30,000 divided by 102 equals 294 units, and you will be left with 49,706 units. So basically, after withdrawing rupees 30,000 in the first month, your number of units decreased slightly, but the price of each unit increased from 100 to 102. Then when you withdrew rupees 30,000 in the second month, the NAV increased from 102 to 105. According to this, you will have to withdraw approx 286 units. 30,000 divided by 105 equals 286 units, and you will be left with 49,420 units. And guys, you don't have to think about how many units need to be withdrawn or how many are left. All of this happens automatically in the background. I am showing this just to explain it to you. So guys, you keep withdrawing rupees 30,000 every month like this. Now just focus on the last row, which is the picture after 1 year. In this, your units decreased from 50,000 to just 46,642 units. But the NAV of each unit increased from 100 to 114. So your total investment value, which is total units multiplied by the price of one unit NAV, increased from rupees 50 lakh to rupees 53.17 lakhs. Understand the depth of this. At the start of the year, your portfolio was rupees 50 lakh. You withdrew rupees 30,000 from it every month, and yet at the end of the year, your portfolio grew from rupees 50 lakh to rupees 53.17 lakh. Isn't that amazing? This is SWP, or Systematic Withdrawal Plan. Now let's see how much you should invest, how much amount you can withdraw as your monthly income, and after how many years you can start withdrawing. Guys, as we saw in our examples, to withdraw monthly income, you first need a large corpus. In the previous example, that corpus was rupees 50 lakh. If you already have that amount today, that's great. If not, then the first step is you have to build the corpus, and you can build that by doing an SIP. Now, how big a corpus to build depends on how much amount you want to withdraw as monthly income and after how many years you want to start withdrawing. For example, let's assume you want to withdraw rupees 50,000 per month after 20 years. Now, don't say that inflation will be high after 20 years. You can adjust the amount according to yourself. Just understand the concept right now. Suppose you want to withdraw rupees 50,000 every month after 20 years and currently you have zero corpus. So you can start investing rupees 10,000 every month for the next 20 years, meaning an SIP of rupees 10,000. By doing this in 20 years, assuming 12% average returns, your corpus amount will become 1 crore. Now, after 20 years, you can set up a monthly SWP of rupees 50,000 on this rupees 1 crore amount, meaning you will withdraw 6 lakh in 1 year, which is 6% of this 1 crore. Now, this portfolio of rupees 1 crore will grow by at least 8 to 10% every year on average, and you will withdraw only 6% from it. So effectively your entire income will be covered just by the interest. You won't even need to touch your principal corpus of rupees 1 crore. In fact, even after withdrawing this 6%, your corpus amount will keep growing by 2 to 3%. Again, you can adjust the amounts according to your needs. If you want a monthly income of 1 lakh after 20 years, you should invest 20,000 every month starting now for the next 20 years. If you want a monthly income of 1.5 lakh, you should invest 30,000 for the next 20 years and so on. Okay, now the only question left is SIP, SWP is all fine, but how do we set up this entire system? Do we have to fill out an extra form or do some complicated calculations? What exactly do we have to do? So guys, this is where we at Zomint can help you. We can help you set up your SWP very easily. We help you create a customized portfolio, select the right funds based on your goals, and handle everything for you. And yes, we are AMFI registered, so you can completely trust us with your financial planning. So if you want a hassle-free experience to set up your monthly income, definitely check us out. Free call booking link is in the description. One more thing, I did not talk about taxation in the entire discussion to keep things simple. LTCG, long term capital gains tax, applies here, but by the time you start thinking about tax, you will have understood the whole game of SWP. Okay, so this is clear too. Now you must be thinking that everything is great. You understood SWP, you understood how much to invest, you understood how to set up SWP. Now just tell us which funds to invest in. Just before revealing that, I have request for you. We work very hard to bring this information to you. If you like the video, just comment, "This is the best video on SWP," and our hard work will be successful. For this, you can simply get in touch with us. We can help you not just with choosing the right funds, but also setting up SWP, everything. You can book a free call with the link in bio.